Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonik to the stage to talk about today's Market Chameleon tutorial. How are you doing, D?
Good. How are you, Will?
Good. Let me share your screen, and we're ready to roll.
Yeah. So I'm going to go to the screener that we're going to discuss first. It's under screeners, and then we're going to go to options by expiration. So click on that. We're going to land on this screener. We discussed this yesterday, looking for options volume, unusual options volume, or options volume that is anchored by a specific options expiration. So today what we're going to do is look for the implied volatility by a specific expiration, and specifically we're going to try to screen out where the implied volatility seems that it's currently below the stock's historical realized volatility. And this lets us screen for potential opportunities in low implied volatility options, especially if you're looking for strategies for low implied volatilities and maybe a particular expiration or expirations that cover certain time periods. We could do that quickly as a starting point with this screener. So really quickly, I'm going to first just the filters are above. We have these data tables below, and we're going to go to this tab, historical volume. And on this tab, what we have is we have the stock symbol, stock price, and price change on the day. Then we have the particular option expiration that we are analyzing with the related data. So this is August 27th expiration. So you could see this is the related data for that expiration. So for example, QQQ, if I just put in QQQ here, you could see it has many different option expirations. And for each expiration, we'll have a different implied volatility, because that money IV could be different as you move from one expiration to the other. That expiration has different option volume. So here in QQQ, let's start at the top. August 27th expiration, we see that here's the IV. This is the total volume for that expiration. And you can see that the volume for each of these expirations are different. Let me take QQQ off for a sec. So what we're going to do here is compare the implied volatility, the at-the-money implied volatility, okay, for each of these expirations to the historical volatility of the stock. So the idea is there, well, how much did the current implied volatility, because the implied volatility is the market's implied or estimated volatility going forward, right? So this expiration already expired. This is yesterday's screener, end of day screener. We're not open yet today, so this is end of day yesterday. But give you an example, like here's December 17, 2027. So this is a leap. This is the at the money IV. So this is giving a market estimated volatility going forward. So right, it's forward-looking volatility. So once when we're looking at the money IV, we could compare that to the historical volatility of the stock to see how much they diverge. Well, we could look at the last 20 days volatility of the stock and see how does that compare to the forward-looking volatility, or we could look at the last 1 year volatility and compare that. So for example, here, the 20-day volatility of WBA was 10.8, but the forward-looking volatility is 6.3. The 1 year volatility is 42.3, while the forward-looking one is 6.3. So this is a large discount, right? So now to the historical vol. Now we shouldn't stop right there, because you always want to dig deeper and do more research, and there could be a reason for it. And in this case, I'm just going to slide over really quickly, and you see this little T here. Well, the T is when we detect that there's that the stock is a takeover candidate, takeover target, and that makes things a lot different, right? Because when a stock gets taken over, let's say a stock price is volatile, it's moving around, but then when a stock, let's say, gets taken over for $12, well, if that happens and the stock goes to $12 and doesn't move anymore, well, that things change. The volatility could be zero, or it could be very low, because now you have a situation where the stock is no longer just trading on earnings and all types of different factors. If the company's getting taken over at one price, then it goes away. Well, that takes that volatility factor out. So even when you're doing these things, these are initial screens. You always want to go and dig deeper. So here we could explain it away. Okay, implied volatility is way below the historical vol. Here on a 20-day, it's 42% below. On a 1 year basis, it's trading at an 85% discount to historical vol. But it makes sense. We could explain it away. It's a takeover target. They're going to, you could go read about it more, but this indicator says we detected it. So we detected a takeover target. If we didn't detect it, you still have to go dig deeper in there to see what is there, but this is based on things that we were able to detect. So how do we then screen out these potential items? We could go up here, and one thing is we may want to look for expirations. Okay, expirations that have volume, because some of these don't have volume. Look, here's like GVI, October 17th expiration, but there's no contracts trading. And if there are no contracts trading, that means we don't know even, the markets could be wide there. Something could be going on. It's harder to establish price discovery when we don't have trades to reference, or even get good quality executions. So we might want to take a look at places where there's trading interest activity. So to do that, we're going to filter out a minimum volume. So let's just say under options volume, we'll click it. And let's say we were looking for options expirations that traded at least 5,000 contracts or more. So there's some trading going on in there, at least 5,000 contracts. So if you click on that, now you could see we narrowed down our potential items to analyze from 31,800 to 1,042. Okay, so these are all option expirations with volume over 5,000 contracts. So maybe the next step we'd want to take a look at. Well, let's first look at the what we wanted to initially do is look for implied volatilities that are below the realized historical vol. So we could look at it. We have two historical volatilities to reference, okay, that on the screener. It's not the only two, but these are the two that we started out with. The one would be on the shorter end, the last 20 days, which is like 20 trading days, about a month. And the other is on a longer term, 1 years of data. So this would be looking at 252 trading days of volatility. So let's start on the shorter end, and let's see if we could find anything where the forward-looking volatility is trading below the last 20 days. So we're going to take this filter, and we're going to look at implied volatilities that are, let's say, 15% below the 20-day. So now we have here, we could see WBA still in there, but it's at 6.3 implied vol, which is below the 20-day by 42%. Right. We could also sort this table. We could sort it by highest volume. So if we go total volume, now we're sorting these by highest volume options. So IWM, FL, BW will show up. We could also go further and say, well, what about the longer term? Maybe we're looking at implied volatility where it seems to be getting sold down, not only below the last 20 days, which could have been, maybe higher than usual. What about the longer term, the 1 year? If we looked at the year smoothed out volatility over a year's period, which would be this 1 year open high low. Let's see if we could find something that's trading below both. So I'll take this at the money, compare it to the historical 1 year, and let's look for something 10% around. So again, now we narrowed it down to 107, and IWM is still up there, but this one already expired. So when we look at the very short term options, implied volatility, it's not as a good indicator any longer, especially if you have 1 day to go. You have just the options decaying all day. So we might want to look for options that have a little bit more days to expiration. We could put 2 or more. Let's put 5 or more. So these expirations have to have at least 5 or more days before the options expire. Click on that. So now we're down to 63. We have FL, WBA, RIOT. And some of these, are takeover targets we could see off the bat. These, we'd still have to go and look. Some of them may be also takeover targets we may have not detected, or something else is going on, like corporate actions. You'd always want to do research, but we do have a shorter list now of candidates to research. You can see here, some of them, are still significantly below their 1 year, 44%, 45%. Here's Intel, 13%, 22%. So what we're doing here is narrowing down the potential securities and options expirations that fit our criteria, right, with trading volume and implied volatility, trading at a discount to the historical 20-day and 1 year realized volatility, and narrowing down those expirations so we could do further research. So even things like, we have leaps in here, looks like some of them are closer dated, but now we have a much shorter list, and we could keep going further. Maybe what we're doing is we could look at implied volatilities with upticks or downticks. So let's just say we wanted to see implied volatilities that on the day, so this was yesterday were closed, downticked even further. Let's say they were down 5%. So now we have 6. So these 6 show that not only are we below the historical vol, but on the day, yesterday, the vol was trading lower. We could go on an uptick. On an uptick would suggest, well, even though we're below the historical vol, yesterday's trading activity had the impact of an uptick in the implied vol. So we could go 5% or above. So now we have 4 candidates where the implied volatility ticked higher than the previous day, but still trading below its historical vol. So, Will, I'm going to stop right there. I think we covered this part.
Yeah, that was a great look into the option screener by expiration, D. Awesome job. Thanks for bringing these webinars to the Chameleon community. We will see everyone. Today is Thursday, so Friday, the last day of the week. Tomorrow, everyone have a safe trading day. Great job, D.
Thanks, everyone, for joining. Stay safe out there. Have a great trading day.
All right, we'll see you tomorrow, my friend. Hey, everyone. Thanks for joining the Market Chameleon webinar series. Remember to follow us on all the social platforms. If you're on YouTube, thumbs up, always appreciated. If you're new to Market Chameleon and today's your first day on the webinar series, please check out MarketChameleon.com. We offer a free webinar or a free 7-day trial. Thanks, everyone, for joining. You have a safe trading day today, and we'll see you tomorrow.